Right, welcome to the FP&AI Podcast, where finance meets the future. I'm Roger Nocker, and joining me again are Anthony Wilson and Donovan Moses. And in each episode, we talk about real finance challenges and some practical solutions and what great finance teams do differently. So today we're discussing automate and systemize routine work. Welcome, guys.
How's it, Roger? How's it, Ant?
How's it, guys? Nice to see you again.
Likewise.
Good. So we've been doing a series. It's setting strategic objectives. We started way back a few episodes ago, and we said a finance team should have strategic objectives each year and update them as part of a strategy and a balanced scorecard process. And we're using the balanced scorecard as our framework. And we said, financially, how do we increase shareholder value as a finance team? And we spoke about efficiency and impact and chasing down actual margins and profit for the business. On the efficiency side, actually just being efficient as a responsible outfit within a business, making sure your own finance processes are efficient. The second perspective, the customer perspective, and we said, what value do our customers want from us? Well, who are our customers in finance? They're typically the business, your colleagues. You might have debtors as well that you see as a customer, and you might be involved in sales and customer-focused processes, but for the most part, they're internal stakeholders, and they should still be treated as customers. And then we move to the third perspective, internal processes, and we said to satisfy our stakeholders, which processes must we excel at? And we started our journey looking at planning and analysis and reporting processes in finance. We looked at quality processes. We're on to the third theme, which is efficiency, productivity, and performance, as well as speed. So we're talking about how do we get more efficient in our internal processes? We know that that's what the shareholders want. We know that that's what our customers want. But how do we do it internally? And last time we spoke about just process mapping and the power of just being clear about your processes and removing friction from workflows. So today we are into the second topic, which is automate and systemize routine work. And Donovan, maybe you can kick it off with something just to start the conversation.
Yeah, thanks, Roger. Yeah, I think coming from a finance background and being a head of shared services for many years, the big idea or the big opportunity that I always had to maybe investigate was around creditors reconciliations. And working for a big listed company, you can imagine the number of suppliers and the number of reconciliations, and you only have so much number of staff. And I would often get flack from internal audit and external audit. You're not reconciling your suppliers before you make payments, and that's a gap. And what we put in place was a 80-20 rule at the time to say majority, sometimes 80% of your creditors' value is probably 20% of the customers, that Pareto principle, and they seem to be happy with that, right? But often is you don't pick up these small volume creditors where there could still be audit risk and fraud happening, and it seems to slip through the cracks. And at the time when we were there, we were looking at technology that could help us with automating our more creditors reconciliation process, because it was manual, it was done on a spreadsheet. You broke up your suppliers amongst all your recon clerks, and they would spend copious amounts of time just doing reconciliations. When you're looking at automating, you want to automate to save time, but you also want to make sure that the risk is addressed, okay? Because there's this fear out there that if you hand over too much to automation and don't have enough detection controls, as it were, how would you know whether the reconciliation is done correctly? And if you're driving your payments off that as well, you want to make sure your payments and cash flow is correct. And so what we started looking at is that, okay, let's look at the low risk repetitive tasks. So we started looking at low risk suppliers, but where there was a high volume of transactions, and started looking at auto matching as opposed to manually matching from a reconciliation point of view. And that presented an opportunity. And I think that's where the big opportunity is. If you can find those low risk, high volume type of tasks, that are repetitive, and that's where the opportunity you want to start first. You don't want to start with those high risk, complex type of journals. You want to start with the recurring journals, but there's low risk in it if you want to start automation. And that's where we started. And I think a big enabler there, or a dependency, is the data that's feeding the automation, your invoices that are coming through, your payments that are coming through to do the auto matching. Is it reliable? So is your data that's coming through your ERP, can you rely on it? Your journals that you want to automate, that we did, the data that's feeding those journals to then now run and post automatically, is the data that's feeding those journals reliable? Because previously a resource in your team would do a whole calculation in Excel maybe, and then upload that and put that onto your journal voucher on the system. But now you're automating that process. So you're fetching data, you're populating your journal on your ERP system, and then it's posting. So we had to look at making sure that the data that's feeding these processes that you want to automate is reliable. And you also want to have one more check of someone reviewing and making sure it's accurate and not just posting it. So we wouldn't go fully automated. You'd automate the mundane, low risk, repetitive part. But the final leg where you're actually doing that posting or your payment, you make sure you have a detection control there, which is often a manager reviewing that. And that's the way you would go. You can automate, but make sure you have that safeguard in place to pick up anything. There was one use case that we looked at automating on the creditor side and the journal side. Another one in one of the industries I was involved with was monthly submissions. Now, come to think of it, we didn't automate that process, but that's also quite a good process to automate, because typically what you're submitting to a regulatory body, it's the same template, it's the same information on a monthly basis, but obviously it's changing because as figures change, but there's no change, but the data is the same. There was a prime example to automate that because the sources of information are the same. You're computing it and you're submitting it, and there is a financial entry linked to that submission in your ERP system. But once again, that was a prime opportunity to automate, which, thinking back, if I known what I know now, definitely a staff member would probably sit 2 hours to do that information, collate, populate the submission, give it to me, I review it, make sure we're happy, then we submit it, then we do the journal entry. So that month-end process between the resources time and my time could be 3.5 hours that could be automated. I would still spend about half an hour to check it, but then you're moving from 3.5 hours of time to maybe a half an hour of time. So I would have liked to have done that, but thinking back is a good example that one could take. So if the data is reliable and it's coming from the same source all the time, yes, automate it. If it's repetitive, low risk, automate it, but have a guardrail of review. Yeah, if that makes sense. That's what I've seen.
So give some examples, like quickly, like just what types of things could you, or you've given us two there, but what else can you think quickly on?
Yeah, I think just creditors alone is a huge opportunity. If you look at your volumes of transactions that's linked to your cost versus volumes of transactions that links to your revenue, from my experience, it's the cost transactions that are quite a lot in terms of that. And that's where there's volume is the place that you should start looking at. And I think definitely creditors, as I mentioned, I know I'm reiterating that, but I think the journals, as I mentioned, and even in journals, there's a huge opportunity. If one looks at all their journals that they're doing, and it's the same journals, just the amount is changing all the time. But it's there. If I give another reconciliation example, besides creditors, but there's these ad hoc balance sheet reconciliations that are done. Not necessarily sub-ledger, but there's these suspense accounts and receivable accounts, liability accounts that sit on the balance sheet, right? That's not necessarily linked to a sub-ledger, but You hold it in the balance sheet, whether it's prepaid expenses. Prepaid expenses is another general one. Insurance. Most of the time, insurance is the same amount and you're bleeding it through. And somebody manually has to then update the insurance schedule and update the prepaid schedule and then post that journal. Somebody will spend like an hour probably doing it, from updating the schedule to posting. That's your insurance is set for the year, and that can be recurring. So one looks at all the journals that they do and all the balance sheet reconciliations that one does, like your accruals, that can be all automated because they just updates, and you're taking from the system and you're just putting it on a balance sheet, on a spreadsheet all the time. You can have automation to update those recons. Yeah.
And there's lots of recurring journals that you can post it on the first day of the month. You don't have to wait to month end to post it because it's going to be the same value.
Absolutely, it's done.
But people don't think of that. They wait till the end of the month and they start all these recurring journals that wouldn't have made any difference if it went through 30 days earlier.
Exactly. And what you want to pick up on is the anomalies. Because as you start automating, then all you want to do is anomaly detection, right? So especially these accrual accounts or these prepaid accounts linked to journals, you just want to pick up if there's an non-routine amount coming through. And with the tech where it is now and AI where it is now, and depending what you have in your company, you can start picking up on anomaly transactions for that account. Because typically your account that's going through in your recon is normally repetitive, or you can pick up a trend, and as soon as there's a big transactions coming in, then as a manager you look at that non-routine one and that anomaly, and then you look at that. So tech is giving us definitely opportunity to work more smartly and efficiently, to focus on the exception rather than the routine and the mundane. And that's where the opportunity lies. Let's look at the exception and let the routine and the repetitiveness run smoothly. Yeah.
So Donovan, I'm not sure if you have ever been in these conversations with implementing SAP, and there's a view that why are you doing a supplier recon, a creditor recon? Why not just pay them on the invoice? You get an invoice, you put in the system, you pay it, and that's it. There's no need to do a recon. What's your view on that? Why do they say that, and what are those situations where you need it? Let them do the recon and send it to you. But you pay on an invoice. If you do a three-way matching, and if it was all in there, then you either pay or you get a credit note or you do something. You don't have to recon their work.
Yeah. So where the question mark comes around, or where the gap or bottleneck comes about, is that three-way matching that you talk about versus the supplier statement. And normally it's your account versus the supplier statement. That's the reconciliation you're doing. And the first thing is cutoff. The supplier is cutting off on one day, your recon and your month end cuts off on another day. So the first thing is cutoff. And so that's why you have to make sure that is. You run your creditor payments in a certain time of the month, so your cutoff is different. So that's why you have to do that recon, they're cutting off on another time. The other one is the receipting side of it. Because you would have receipted, especially when it comes to things that you are charged by weight or volume, and it's not straightforward. I ordered 30 units and I'm getting 30 units, right? Normally if you're ordering things like coal or cement or something that's based on weight, when it's coming over your weighbridge and your ERP is auto receipting it, but the invoice comes and the delivery and it's saying something else. So yes, you've got some technology that if it's within threshold, it'll just go and it'll auto match and it's fine. But often that's another issue where, depending what your policy is, that can cause a difference between that. So on the receipting side, before you get to that invoice, and the invoice, what comes through versus what you've receipted, there's a difference that's there. I've seen it a lot, especially when you pay transporters separately, and the transporters are charging on the volume and that doesn't match. So it can get
so in
quite
practice,
complex.
it's not as straightforward as just paying on that invoice. And like each invoice, they say, is a recon in its own right. So if you paid it and you had the volume, it was delivered, the three-way matching, then there's nothing more to be done.
Exactly.
But do you trust your supplier system, and have they recorded it correctly? And then
yes,
But then I suppose they're going to come back for that same invoice and say, oh, it needs to be paid. So no, we paid it. At that point, you tell them it's paid. I don't know.
Yeah. And,
The
and
worst is they keep coming back to you and say, you haven't paid, you haven't paid, you haven't, and it's
and they
still on
stop
the
your account,
statement.
and there's another issue. Yeah.
Yeah. So,
And you see those opportunities with EDI and with customers, and you're auto posting to their system because of EDI, but no one trusts that. Although it's the system talking to one another, suppliers and customers still want their own guys to validate that truth, because it's just the right thing to do as a control.
Yeah.
And that's why, Roger, those type of accounts are your exception, like what I was talking about. But all the other customers where it's straightforward, or suppliers where it's straightforward, the opportunity to automate those reconciliations and those processes are much simpler. I mean, we've automated to a point where it even does the payment. That as long as all the checks are there, it automatically creates the batch file to the bank automatically, and the person releases it. So there's no one step between the ERP and the bank. The ERP posts straight to the bank. We went all that way to automate right to the bank section, but you have to have that safeguards in place. So the opportunity is definitely there, and I think.
So yeah, absolutely. So you've given us some good tips on all the types of transactions. What about reporting? And like, what can we do there? Because that's the close and the transactional stuff is one thing, but a big part of what we do in finance is our reporting. So
yeah.
How do we automate that?
Yeah, so you see it a lot, I think, in companies where, again, it comes back to that repetition. They kind of do the same processes every month. Individuals do the same processes every month to be able to get financial reporting ready and sorted out. And a lot of time, I think, is spent actually getting the data right and getting the data prepared so that you can actually report on that. So you see it not just in smaller businesses, even in big corporates, where every month someone goes and they download the data from their ERP in the format that their ERP provides it, and they put it into Excel, and then they've got a sheet that transforms that, and they've got another sheet that pivots it, and then another sheet that summarizes it, and then another sheet that adds in the prime month value so you can do a year-to-date comparison, etc., etc., etc. And it's the same things that people are doing every single month to get to that transformed set of data that they can then build their reports on. One thing that you can look at is actually automating that manual export transformation process. Yes, for your big corporate business, it makes sense. You might have more complex ERP systems. You may have multiple ERP systems that you're running. And in that case, it does make sense to look at tools and technology that are designed to manage those big sets of data. So your ETL tools, or if you're running a CPM tool, there's usually a fairly good integration module that you can use within those tools to be able to fetch that information and transform it and make it available in a database that not just one or two people can use, but the business can leverage. And what that brings to you is not just the efficiency of I've got data that's automatically transformed and ready for me so I can report faster and easier because my starting point is a clean set of data. But it also then, of course, makes that data available to a broader audience. So it's not just your transformed part of the data that's sitting in your Excel file that you're using for your reports. It's now available for other people to leverage and use for their own purposes and reporting and other systems. But we also see, I think, in your smaller, medium-sized businesses, you potentially don't have the budget to buy an expensive tool to do that for you. But there's so much that's available to us that we already have access to in the, if you're running Office 365, for example, even just Excel, there's a lot of automation that we can bring into these tools to help with that repetitive process, be it using a macro in Excel, using Power Automate, using AI to be able to do those common same tasks every month to transform your information. And you can bring those sort of automated processes in. You don't need necessarily to go and buy an expensive ETL tool to do that for you. It's just a matter of sitting back and going, all right, what am I doing every month that's repetitive in terms of preparing my data? And step by step, how can I find a way of automating that with very little intervention when I'm getting into my reporting? So that's obviously the first side of your reporting process, is getting that clean data in. And the same principle applies when you building up your reports. Again, there's often so many repetitive tasks that are done to bring templates together, to align, to check, etc. Again, that can be automated. Even if you're reporting in Excel, for example, bring structure to those files that is consistent and repeatable. We had a customer, a corporate customer, who was reporting in Excel at a stage, and I think it took them 4 or 5 days to get their information from the ERP system to where they could actually look at reports. That's before they analyze, before they actually report. And we implemented a corporate performance management tool with them, and it reduced that time of getting the data into the system so that they can start looking at the reports from days to between 2 and 3 hours. And that's the sort of win you can get if you start automating those sort of processes.
Absolutely. If I can come in there, we've spent copious amounts of time just on variance commentary, right? And that's where the business or your partners or your customers that you alluded to earlier on, Roger, want that value, the variance commentary. And then taking that variance commentary and putting it in a pack. And nowadays, they want the pack to be like a PowerPoint, but also, depending on who your audience is, sometimes you need a lot of data if it's within your country exco, but when you're presenting it to maybe a group exco, you want a summary pack, right? And you spend a lot of time with faffing around with font sizes, jargon, and all of that, for example, in just the presentation. And what tends to then get discounted is the richness of the commentary, the real insights. And okay, that's the insight, but what is the remedial action, or what do we need to do for the remaining of the year? So that insights and the richness of the commentary gets diluted because now you're faffing around formatting, alignment, and jargon, And I think with this day and age, like Ant mentioned, with the tools that we have available, if the data is there, like Ant mentioned, and the data can be relied upon, the richness of the variance commentary, using the right tooling at your availability, like you mentioned, some of the AI tools that's embedded in your Microsoft 365 stack already, can give you that variance commentary. So all you need to do is have your set prompts, and it'll give you that variance commentary, and then you use that variance commentary that's generated to do your PowerPoint deck. And it's amazing that what you can do, and you'll save a ton of time. It'll look visually, aesthetically better. Your richness of your commentary is there, your remedial actions, your recommendations. Hey, now you're really business partnering with the business.
I see you've been messing around with Copilot in some of these processes. What have you discovered in this year? What have you discovered that you didn't know last year about how to do these processes?
Yeah, I think one needs to start. If you have the time to mess around, like you said, the insights that I've picked up is, number one, understand which workflow you want to optimize. Now, let's say, for example, we're talking about the month-end reporting workflow, okay? Where's the most time spent? And in our previous session, we talked about the process. So let's say after documenting the process, just putting variance commentary and putting the deck together is where we spent the most of the time, right? Okay, right. Now, like I mentioned, if the data is already available, all that means is getting your data into Excel, right? For example, your data is there, and that can be automated in itself. Let's park agents for one side, right? All you have to do, and if you have a standard prompt, and the other thing is the quality of your prompt. Now, once you refine your prompt into a good quality, you can keep it, right? And every month you use the same prompt, and you just have to tweak the date or the period or where the fiscal period where it makes there. But now it's using that data. It's going to create the insights. It's going to create the commentary. It's going to create dashboard. It can create all of that for you. And then you can use that same Excel file, suck it into PowerPoint, and then you use the same type of prompt in your Copilot in PowerPoint and say, now update my slide deck. So you've created your slide deck. Now you just want to update the slide deck, and it knows which slides to update. It knows the commentary associated with the numbers. And yeah, I mean, you really reduce the time for that. Yeah.
Guys, thanks. That's all for today's episode of the FP&AI podcast. Thanks for joining us, and thanks to Anthony and Donovan for sharing their insights. And if you found this discussion valuable, please like and subscribe and share the podcast with a colleague who might be doing lots of manual work every month, and you could save their lives for them. And we'll be back soon with another conversation where finance meets the future. Until next time, take care. Thanks. Cheers, guys.
Cheers, Anthony.
Bye-bye.
Thanks for having us. Bye.